Hey, Bulls. Good afternoon. What's going on? Happy St. Patrick's Day. Not so happy World War III. Not so happy Fed rate hikes. Not so happy at the gas pump. A lot of things going on. A lot of things causing volatility. The good news is that we're going to be buying vol this week. The only suggestions I have are a couple straddles. I'm going to put out 5 straddles for you guys. You're going to make money on this volatility, and we don't care about what the market's doing. I'm really confident about this one. I'm really happy that we got you guys. And also, welcome to all the new subscribers. You guys ready to make some money? I'm going to show you. Little low energy Sherpa today. Little just finished the Substack Sherpa today. All right, let's get going here. We're going to go to what we always do, guys. We always go to the Sherpa.substack.com. There's some free content on here. The valuable winning trades are behind the paywall, guys. Go sign up if you haven't yet. $20 a month. You can see all the trades that I made. Give you a little rundown here. A couple things that I think is going on. Urgent sellouts when they're necessary. Updates when they're necessary. Some client wins when they're necessary. For the most part, the main reason that people jump in here is for the weekly game plan, which is I got to think it's the best one on the internet. So, all right, the game plan this week, we got a market update. The banks are getting ripe, and then 5 option straddles this week for the Substack only. I'm putting one out today. That's my most confident one. Tomorrow, there's going to be another one based on where the market goes. That will be more confident. Then another one and another one and another and so on. So go subscribe to the Substack, but I'll give you this first one for free. All right, Bulls. Happy St. Patrick's Day for my Irish Bulls, Daylight Savings Bulls, Spring Break Bulls. Probably a lot of headaches out there in the crowd today. So I hope you guys enjoyed it and had a good time. We're going to do the market update, the straddle. So market update, where are we at? By the way, I want to take this time and toot my own horn a little bit and remind everybody that I've been screaming from the mountaintops oil since early February. We had a sellout on the 24th. So we missed a lot of this pullback, guys. You're welcome. That's why you follow the Sherpa. The Substack is making money in one of the fastest growing trading Substacks of the entire world for a reason. We're at number 5 now, Bulls. Help me keep growing it. Help yourself keep growing your accounts. We both win, win, win. All right. This is just the market. I think that this is interesting. This is the market on Friday in my Stockmaster app. The Dow was down 0.69. NASI was down 2%. S&P was down 1.3. And the futures were getting worse. When the futures get worse after market on a Friday, that typically actually does carry over to the next week. Can't guarantee anything, but let's take at these sector performances. I'm done telling you how great I am, but it would have been nice to own energy last week, right? Instead of owning consumer staples, information technology, healthcare, or consumer discretionary. So the best sector was up 1.8. The worst sector was down 5.7. I don't know. What is that? 6.5 something, right? No, 7.5 something. All right. The delta, that is. The 1 month energy was up 8%. If you were triple levered on energy, what would you be up? 24%. A lot of my bulls out there are up 24%. Some of them are up 50% since we started talking. So congrats to you, bulls. Real estate flat, utilities up a tiny bit. That's kind of a defensive posture, right, that the market's taking. Funny enough, the financial sector is going down, and that's because of the 10-year treasury, which I'll show you here in a second. So this is the 1 month. So energy is the leader over the 1 month. And then check this out. This is scary, bulls. We've got the energy sector here. And we've got 57% return, utilities, 0.14%. And then we have communication services, discretionary. I don't know why the rest of that cut off. I'm not real happy about that, but that cut off a little bit. But you can see here, financials a little bit lower, healthcare, everything's kind of chilling here in the middle. And then communication services and discretionary, not so weirdly that discretionary would be down so much over the last 6 months. Those are like your Louis Vuittons, your Michael Kors, luxury items like BMW, those type of things. All right. So we can tell that things are looking grim, right? Do you think that you should be fully invested when things are looking like this? If you are fully invested, what type of sector should you be in? Wink, wink, hint, hint, nod, nod. The one that I've been telling you to be in. The past 6 months we've already gone over. What's up with the Wall Street Journal? So let's keep those sector discussions in the back of our mind, those sector returns in the back of our mind. And then we have the ruble is bouncing off the bottom here, basically completely collapsed one of the major currencies of the world. The Russians are attacking Kyiv, and um, I don't need to tell you guys that there's like a really sad, shitty war going on. Funny enough, still makes the front page. Stocks log another weekly decline as war risk put investors on edge. I think that's a perfect explanation. I don't love the Wall Street Journal. You guys know that I think that it's mostly a shill, but they nailed it on that one. And then unprecedented territory on market watch. Jitters, investors watch for the Fed starting hiking rates among high market volatility. High market volatility. Fed raising rates. Look, this is bearish and gloomy. The unprecedented territory, specifically in the relation to the rate hikes promised by the Fed earlier this month, or to happen this month. It's been promised since December. And this is basically meant to be a speed bump to a growing inflationary, burgeoning, bustling economy so that we don't grow too quickly and then snap into a depression. That's the idea of rate hikes. And they are being launched in the middle of this month. And there's supposedly going to be 7 of them. Go back and check the tape. I've told you that I would bet every body part that I have, that there will be no 7 rate hikes. 7 rate hikes, that's insanely impossible. They never thought that they were going to do it in the first place. And then, oh yeah, by the way, we're on the brink of World War III. Sectors that do extremely well during inflationary and rising rates are banks, commodities, and staples. We've seen it with commodities. The banks are getting very, very ripe. Mark my word. FAS is going to be a buy here soon. If it drops below, let's say 90, I'm going to put everything I have into it and then chill the rest of the year. But it's not there yet. Okay. All right. Getting some text there. All right. So that's kind of the hypothesis. Let's check out the rates. So last week when we did this, the U.S. 10-year note was at 1.7. The 30-year note was at these guys are killing me. The 30-year note was at 2.1, and then the rest of the notes you can see here have basically just gone up by about 30 basis points. Raising rates, market going down. Weird, right? Should you be fully invested? Does your advisor have you fully invested? Does it make sense to be fully invested? And if it does, are you in those stocks that are going to do well? And have you been? And if you haven't been, go subscribe to my Substack and buy one of my portfolios. It's my mission to help you do better, and it is this easy. All right, commodity-wise, we've got energy. So this is the crude, the one that starts with a C here. So we're at about 110. This is stabilized from 125, and it actually hit almost 135. I think it was 140 last week. But I think this is actually going to continue to climb up. There's nothing actually out there, in my opinion, that's going to stop this. So it's a good time for the energy companies to kind of handhold the market. And then also we got the Saudis who are really in control of our own economy by how much oil they decide to flood the market with or restrict. And then remember that we frack and we produce and we drill and we have a lot here too, but we have been trying to kind of balance this whole Libra scale of who, what, when, and where. And it's just going to shift back to America. I'm actually super positive about shutting Russian oil out of this. It's only going to help us. There is enough oil and petroleum resources in the United States and in Texas, and we may actually find out what's really in the reserves, and we actually may start growing our relationships with South America here. So I think it's all good things. I'm taking a contrarian view there. And then crypto, the bright spot in crypto is, look, the market's going down. We saw the returns on the sector sheet there. We saw that the banks aren't making any money, and we're actually watching the Ukrainian people utilizing things like Bitcoin, utilizing things like crypto, utilizing things like DeFi, getting rid of the SWIFT codes, which are only going to help crypto and banking and its utility. And notice that Ethereum here is crawling right up, and that Bitcoin is still sitting. So we were at what, 31 at the beginning of last week. We are now at, Jesus, guys, how do I stop this? All right. My God, amateurs. Sorry about that. All right. So we have Bitcoin 38. I liked it at 42. I'm going to love it at 38. Bullish on GBTC, which is the Grayscale Bitcoin Trust. Ethereum, strong buy also. And then also remember that you can always own Solana in a digital wallet. And when you do that, you're basically just putting it there for the long term. And I do think Solana is going to be the ultimate winner. behind Ethereum and Bitcoin. Don't touch Ripple, Luna, Binance Coin, or any of the others. Okay, so the strategy this week is to buy straddles. We're going to buy volatility. We have no clue what the market is going to do, and there is too much fear to be going long on anything. So let's make the market work for us, and let's sell some vol. I put sell. We're going to buy some vol. Sorry, we're going to buy some vol. You guys remember the QS and ARC straddles that cashed for us last month? We're going to rinse and repeat that one, but we're going to do it with Palantir. The idea when you do these straddles is to do it with large companies that are extremely high leveraged and trading at a very high multiple, and in sectors that increase volatility. Remember, I don't care if it moves up or if it moves down. I just want it to move up a lot or down a lot, and that's what you do during expected volatility time. So here's Palantir. I want you to go out to the May 20s. So the May 20th, which is 68 days. We're going to give ourselves 68 days for the market to either shit its pants or the stock to either shit its pants or to go back up to where it was. And we actually have really tight ranges on this one. So right now we're looking at 1139 for Palantir Technologies. And when we have that, we're going to see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days, 11 trading days, 12 trading, 13 trading days ago, this was at 14. 12 trading days before that, it was below 13. So it's moving in a range of roughly $4-ish in a couple weeks. All right, 15 trading days, 20 trading days. So what I want to do is we're going to go out of the money a tiny bit, which is at the $10. So we're giving ourselves a buffer on the downside a little bit. So we're going to go to $12 May 22. So May 20th of 22s. These are the weeklies. So with these, we're going to go and just buy the call. Remember, a straddle, in this case, a long straddle is we're buying a call. This call is at $12 for $1.31. We're also going to buy a put at $12 for $1.90. And what will happen here is we will be in the money if Palantir goes above, and this should say 13.31. If Palantir goes above 13.31, so $12 plus the 131, we will be in the money. And we want, if it goes below, and this would be $12 minus, so what would that be? Yep. So that would be below 10.10. We just carved out a range, roughly $3 in the middle. This thing moves a lot more than that, and we don't even care which direction it goes, bulls. Remember that we're just buying volatility, which, reading those headlines above, I can expect all of my Substack, we can expect, that is, all of my Substack subscribers, as a reward, as a thank you, I'm putting even more time into this, and I'm going to give you a straddle just like this, a market neutral strategy every day this week. You can follow at your will. You can do it on your own stocks. You've learned the strategy. You know how to make money off of volatility. And now we want the market to go haywire, whether it's up haywire or whether it's down haywire. And we're not stuck at the mercy of the whims of shitty financial advisors that tell you to buy and hold all the time. Your stupid friends to buy stupid stocks like AMC and GameStop. And now you can subscribe and get the best trading edge and education on the entire internet. Go subscribe to my Substack. This is the value I'm showing. This is why we're number 5 in the world. I'm not stopping until I get to number 1. And a big highlight, it's thesherpa.substack.com. That's all I got for you guys. Go get rich. AFG, LFG, LGR, the Sherpa, baby.